I'm Ross Naddock with Van Ahn Company with your closing comments for June 9th. Today we had a kind of a mixed bag. We had a USDA crop report here at 11 o'clock this morning. That did set off a stage for little action in the markets, I guess, because they made so few changes there. As we look ahead as USDA and their impact, what they might have in the market, June 30th is going to be an important date here to be watching and what they come out with in that report. This week has been pretty positive for the grain markets as we start to focus a little bit more on the new crop production. Lack of rain in a number of areas here, the rain that's needed in the areas that had excessive rain earlier on. A lot of replanting getting wrapped up here at this point in corn. And then we continue to get crop conditions here we'll be watching on Monday as well. So kind of a mixed bag at this point here, but we have had an uptrend here this week. Hopefully we can sustain that. On Sunday night, we'll come in here and look at the weather forecasts and what rainfall amounts have fallen as well. That could set the stage for either a further rally in this market or a temporary pullback here, some profit taking if we did get some measurable amounts over some areas. On the week, corn finished up 15 cents, soybeans finished up 20 1/4 cents. Minneapolis wheat led the charge up 22 3/4 as they have the bigger issues around them right now. In the livestock sector, we had live cattle that settled up 42 1/2 cents. Up and down here pretty sharply both directions here through the week. Feeder cattle down $4.55 and lean hogs up $1.25. So with all that said, in the cattle market, we had some light cash trade here today. Nebraska being about $1.50 under last week's trade on average around 136. We'll need this demand here, which has been extraordinary here in the beef. Global demand has just been outrageous here, which has been great. But at the same time, we need to be watching what the packers are going to be, what they're going to be interested in over the next couple of weeks as Father's Day demand is wrapping up. So we need that to continue here, that demand to stay strong to support these levels. If you look at the charts technically in the live cattle market, you do see end feeders at the same time. They both put in a major double top here. We can't call it that until we've confirmed it. But at this time, a breaking market next week, people are going to start talking more about that potential. However, if we do get more cash trade, then we're back to the races. So we'll watch that as we go. Lean hogs, we are continuing to trend higher as we get closer to that seasonal high time frame around mid-June. Last year, June 14th did mark the high in the hog contract. That's where we sold off from. So we do encourage some marketing there based on that. $84 futures is our next target in June hogs, if you want to look at some options at that point. I'm going to leave you with the disclaimer here. Past performance is not indicative of futures results. Options in trading involves risk of loss and is not suitable for all producers.